Good morning. Today is Thursday, August 25th, 2022. We have a special guest host today to help talk us through some of these student loan issues that we're seeing all through yesterday and then into today. Of course, there's going to be a lot of talk about that, but we're going to lead off by talking about some economic data and some news that we've got from various companies' earnings reports. And for the economic data, we'll turn to Tom. So Tom, we're looking for the second look at Q2 GDP. So what happens is how this works is the Bureau of Economic Analysis comes out with their preliminary estimate of GDP, and then they'll subsequently revise it twice over the ensuing months. We already had our first look of Q2 GDP that came in at -0.9, and we're expecting the second look this morning. So do we have that number, Tom?
We do. So it's a little bit of a mixed bag here, actually. So the GDP improved. The revised number is actually -0.6 for Q2.
So still recession, still 2 quarters of negative GDP.
Correct, depending on your definition. But the interesting thing is the GDP price index was also revised, but it was revised up to 8.9 from 8.7. So their indicator of inflation actually accelerated. So definitely something to keep an eye on. Core PCE was flat, same as before, 4.4%. Personal consumption, 1.5. That's right in line with expectations, though it is up from the prior read of 1. And then we also just throw it in there. For a total picture, we have initial jobless claims coming out as well. Came in under. The expectation was initial jobless claims of 252,000. Actual was actually 243. We've not gotten a revision on that just yet.
That's interesting. We're definitely seeing some improved macroeconomic data. Even at the same time, we're seeing some weaker microeconomic data. NVIDIA reported earnings last night. They're down about 4% pre-market. We knew their quarter was going to be a little bit weak because on August 8th, they actually took down their guidance for the quarter, but their commentary and around what they expect going forward is pretty negative. They basically are going to undership new chips. So for example, in Q3, which is the coming quarter that finishes in October, they expect $1.4 billion-ish of gaming chip revenue. They say the underlying demand is $2.5 billion. So what they're trying to do is take out inventory in the system. The question is, what is in demand? You don't take a $1.2 billion charge on inventory if you actually think the demand is still there. So they're trying to make it sound like this is just their decision, but I do think that there's some weakness in that. Other companies that reported earnings yesterday and into this morning, Salesforce.com, that's down almost 7% this morning. They're expected to decelerate significantly in Q3 and Q4. They said that beginning in July, things really slowed down. And so they're expecting to go from 26% growth in the first half of the year to about 18% and even falling growth in Q3 and Q4. So taking down their guidance pretty significantly, saying that deals are being inspected by higher levels of management and that no one really knows what's going on. The CEO, Mark Benioff, said that he's met with hundreds of CEOs and everyone has a slightly different answer for what's going on in the economy. So that's what's going on at Salesforce.com, which provides a lot of CRM software. Snowflake, which is a data warehousing company, actually showed that it was relatively robust and raised guidance. So in any of these companies, you can't really paint with a single brush. There are different things that are affecting different companies. Some of it's the macro, some of it's how they're positioning the product and how imperative it is. And I think that this is going to be a big trend that we see, especially in the software space, is how truly imperative are these technologies and how are they going to manifest in the future years. Dollar stores also reported earnings. Again, at Tale of Two Cities, Dollar General was down about 2%. Dollar Tree was very weak, seeing really bad margin hits because they're investing in price at Family Dollar. And then finally, Peloton is down 15% after a terrible earnings report, which really just the CEO was self-aggrandizing to the max. Tom, we were talking about this before the call, and he gave an anecdote about how he spent a summer on a cargo ship and he saved 2 men's lives that day, and that the naysayers will say that this is the end of Peloton, but what he sees is a really strong company. It's just weird.
Yeah, the Peloton is his new cruise ship, so he's out there saving lives, one bicycle at a time, I suppose. I mean, this is the second of two announcements he's made really in the last couple of weeks where he's made some sort of wild statement, because he finished his address, was it 2-3 weeks ago, where he was like, Peloton is you connecting to me connecting to you. We're all connected to each other because we connect to the earth. Like, it was just like,
And then he fired 800 people.
and then he fired 800 people, but it was very bizarre. So who knows with this guy? I mean, the stock was up huge yesterday, saying that they were going to start selling the bikes and the equipment through Amazon, and they were going to deliver them on Prime. And then, of course, all of that just went away today when they turned around and showed their results. So
It's weird. It's just weird.
the company is a disaster.
So trying to make sense of that. But we're also trying to make sense of what's going on in the student loan. So we have Melissa here. Thanks for joining us, Melissa.
Thanks for having me.
She's our financial planner here, for those of you who have not met her. And so we're just going to talk a little bit about what the student loan forgiveness plan that was announced yesterday means, and the implications of it going forward. So just quickly, Melissa, give us the high level program. What are they doing about student loan repayments restarting? Because they've been on pause. People haven't been paying their student loans for the last 2 years, or haven't had to pay them for the last 2 years.
Right. So yesterday, the Biden administration released their student loan debt relief plan, and that included 3 main points. So the first being the final extension of the student loan repayment pause until the end of the year. Quote, final, because we've heard that before. I honestly thought it was going to be extended until maybe the election. So I was pretty surprised to just see by the end of the year. So we'll see what happens with that. Another point is providing debt relief to low income and middle income families. So specifically forgiving $10,000 for borrowers making less than $125,000. That's if you file single, and then for households, it's double that, $250,000. And then $20,000 of forgiveness for Pell Grant recipients, and that's still following that income threshold.
And people who might have had Pell Grants are who?
People usually with lower income levels.
Okay. So that's a lot of helicopter money, it seems, that should be helpful for people with these student loans. A lot of these people haven't necessarily made payments on these student
Right.
loans before. So they may never have to
Right.
if they have this student loan forgiven. So if you are in that bucket, however, of maybe you graduated in 2018, 2019, you made a few student loan payments,
Mhm.
and then the pandemic hit, and then you haven't made a payment over the last 2 years, how do you prepare to make those start making those payments again beginning in January?
Right. I think that's a great question. And I've told this to clients before, and I've said this since the beginning, is to go ahead and set aside what would be your monthly payment into any type of savings account, high yield savings account, have that cash build up. And so that way, when you have to resume your payments, you have that cash available and you can make a payment with that amount of cash that you have. And it also gives you some flexibility if something does come up and you do need to use that cash.
And then we might have people on the call, I don't know, but how would you go about actually getting the forgiveness piece of it? So if you think that you're eligible for the $10,000 or the $20,000 even,
Mhm.
how would you go about attaining that and making sure that that hits?
So according to the FSA website, which is the Federal Student Aid website, it should be automatic. This is only for federal student loans. So there's nothing you'll have to do unless if you are worried about your income that is being reported to the Department of Education. They're supposed to send out a simple application in coming weeks. And so I'm curious to see how that's set up. Is that just a fill in the blank? This is my income. What income year are they looking at? Can you submit a pay stub? What if your income is less now than it was last year? How are they determining this? So there's a lot of questions surrounding that. And for those who are interested, you can go to the Department of Education subscription page and have them notify you when the application is open. I will say I've been trying to go on the FSA website to look at different articles, and it seems like it's crashing. So I'm curious to see how that plays out.
For what it's worth, what I've seen so far, and this is not from it's a hearsay story. I can't remember which newspaper put it out, but they were talking about whatever, if you made less than the threshold in either 2020 or 2021, you'll be eligible for that. But again, that's not from the original
Right.
documentation. That's as reported. Should we expect them to do more for them, meaning the government? Should we expect more student debt forgiveness in the future, or is this it? If you didn't have student debt at this time, then you kind of, you're not gonna get it in the future.
Right. I don't think you should expect it. I don't think that's something good for borrowers to ingrain in their mind that, oh, I might potentially have more forgiven, just like we shouldn't have expected this. I don't think it forms good saving habits either.
And then, of course, the big question is, how are we going to pay for it?
Well, according to the Penn Wharton budget model, $300 billion will be used.
So it's going to be $300 billion. I think Biden was talking about how his deficit reduction, which again, he's using 2020 as the baseline here and saying that he reduced the deficit by $1 billion in 2021, and then it's going to go down again in 2022. But again, this is the deficit that uses 2020 as the baseline, that uses all the PPP money and all the government checks. Of course, there was going to be a massive deficit in 2020, and we were always going to reduce that relative to what it was in 2020. So to say that he's already reduced the deficit by the amount that is required to pay for this is basically measuring a meter with a ruler, with a foot ruler.
I mean, I think it's also important to look at some of the other numbers. I mean, UPenn put out a statement yesterday that they estimated that the cost of it could be 300 to 980 billion, which is a pretty wide chasm there. I mean, it's a difference of $680 billion. And even that wouldn't even be half of the amount of outstanding student loans at $980 billion. So the question is, who really benefits from this? It's not people who didn't go to college. It's not people who, have done the responsible thing and paid off their own student loans. What it does is it basically, you're saddling everyone with a burden, and I think that, another piece we need to look at that maybe we haven't talked about is the fact that there's been a lot of headlines saying that the move itself is actually unconstitutional, similar to the rent moratorium, where, you could basically not be evicted for not paying your rent in 2020 that was ultimately struck down by a court. That this is all just a, promising the student body that you're going to have pizza Fridays in order to get elected student body president, when you know full well that you actually can't do that. And I think that that's actually probably the most likely turnout here, is that, somewhere in the next 4 or 5 months before anybody gets anything done, this is going to get struck down and not be a thing. But that's just my opinion.
Another question for you, Tom, that I have is, because this is what a lot of people are asking, is what is the inflationary result from this?
I mean, I think that it's illogical to think the outcome is that if you have someone who's, say, paying $300 a month to pay their student loans, and then suddenly they don't have to, that they're going to take that money and they're going to save it, or they're going to buy a house. They're going to spend that money. And if you're in a situation where you may or may not have, irresponsibly gotten yourself into a situation where you couldn't pay your student loans, that you're going to responsibly use the money left over. It's moral hazard. It's the way the world operates. When people got all their stimulus checks, Nike had a great quarter. It's not because people were buying stuff they needed to buy. It's because they bought Nikes. So I think that's how we need to look at it. And it's not going to slow demand. If anything, it's going to spur inflation, because there's more money in the system. There's more spending by the government, and that creates more demand, which I think was probably going to indicate more Fed rate hikes. I mean, it's just, the best way to solve inflation is not more inflation.
Yeah, I think the big question is how many people were saving, because it's a weird environment, because it's not like people have been paying their loans over the last 2 years. In fact, they're going to have to start paying, but now you're also forgiving a lot of this stuff. So if they were paying every month, you'd think, okay, well, naturally they don't have to pay for that anymore. That's going to have an inflationary impulse. The question I'd have for you, Melissa, is were people appropriately saving that $300 every month that they needed to pay for the student loans?
That's a great question. I guess we'll find out.
Yeah. And so my last thing here on this point, and if you have any questions, please submit them on the chat. But is this a good thing? Is this a bad thing? Is it a necessary thing? What is the overall view of this policy? Do you think it's comprehensive enough to actually address the problem going forward?
It's a great question as well. I think it's a combination of all of those. I think it was necessary for Biden. He had promised this, so he needed to deliver that promise for the votes. I think it's both good and bad for some of the reasons why we're hesitant on this. Good because, I mean, as a borrower myself, I can't complain that I'm going to have $10,000 forgiven.
You're welcome.
Thank you. I think it's good. This is something we didn't address at the beginning, but they're also trying to revamp the income-driven repayment plans, which needed to be revamped a long time ago. So I'm interested to see what happens with that. I think that can make a big impact for borrowers with low income. But there's a lot of questions still left with that. I also think it doesn't address those who took out private loans, who try to approach this in an interest saving strategy, and they're not getting any sort of debt relief from this. I think it doesn't address those who are currently in school trying to pay off their education, or who currently have loans. What's going to happen with that? What about those who went to grad school, the doctors, dentists, veterinarians, the lawyers, those who have a large impact on consumer spending, and we're not helping them out with this?
Or even the people, who receive master's degrees in education or
Right.
public health or things like that, who would be eligible under the other on the income threshold, but aren't eligible because it's graduate loans. Tom, what are your thoughts? Good, bad, indifferent?
I think it's garbage. I mean, I'm going to go on a little old man yelling at a cloud rant here, but I just think it sets a bad precedent. It makes everybody soft. If you don't have the money to go to college, you can find an occupation where you can make plenty of money. I mean, my wife is a hairdresser. She crushes. She didn't go to college. She didn't take on student loans. She found an avenue to make money elsewhere. I paid off my student loans. I just think that it sets a bad precedent. And this money, it's not like this money just goes away. That was money that was paid out. These universities got that money. Now there's a gap as to where that money comes from, and it just gets spread to everybody else. And if it is really $980 billion, I mean, that's a massive tax burden on every American. Unfortunately, 45% of Americans don't pay taxes, so those who are paying taxes are taking a heavy load here. And I think that it hurts the future income of everyone involved, because the more fake money you push in the system, the more expensive housing becomes, the more expensive goods become. It hurts the outlook for not only yourself, your future ability to generate wealth, because you're going to be stuck renting forever because we've inflated housing away from you. But I think it's a mental loss. You take an L because you weren't able to do it yourself. But that's just my opinion. But I'm an old man, so that's how it is.
Yeah, and I think the final piece is that we need to consider is, how does this impact things going forward? And are people going to count on, man, I just need to wait for the next recession because I know my student loan is going to be forgiven? And I think that's the concern of what's going to happen going forward. Already we're seeing people not pay their utility bills. Are those going to be forgiven? There are things here that are necessary to live and grow in this economy, and those are an expense, and people have to pay them before they can go buy those Nikes. And I think that's something we have to continually be cognizant of and be disciplined. And I think that this potentially hurts that discipline going forward. As far as the economic impact goes, I think it is necessary. I think they had to do this, and I think they had to marry the student loan payment restart with some forgiveness. I think that just had to happen, the consequences of not doing that in terms of economic consequences would have been severe, especially at the lower middle incomes. And I think this was a necessary evil, given what's happened over the last 2 years. You could argue that we probably shouldn't have stopped payments at any time. But after not paying for 2 years, there has to be some off ramp.
Hello,
I think this was
how you
a
doing?
appropriate off ramp.
Just kind of
But something needs to be done with the root cause going forward.
through.
So with that, thanks for joining us, Melissa. Thanks, Tom.
Good call.
And we will see everybody here tomorrow for Jackson Hole.
Oh, it's